Morning, guys. It's Wednesday, July 2nd, 5:25 a.m. Central Time. Grain markets are mixed this morning. December corn futures down 2 3/4 at 4.19 1/4. November soybeans up 4 cents at 10.31 1/4. December Chicago wheat unchanged at 5.69 1/4. December Kansas City wheat up 1/4 cent at 5.55. Guys, if you have not subscribed to the channel, if you're watching on YouTube, make sure you hit the subscribe button. Mackenzie, how much does it cost to subscribe on YouTube?
Absolutely nothing.
$0. Just hit the button.
Yeah.
It'll help us out. I mean, I know a lot of you guys don't want to pay for or can't afford the premium stuff, and that's cool, but just hit the subscribe button and help us out. We're creeping up on 22,000 subscribers. So for all of you guys who have subscribed, we really appreciate it. It does help us out. All right, let's get into our first story here. Lots of chatter regarding national corn yield possibilities. This is going to upset and trigger some of you.
So, chatter regarding U.S. national corn yield possibilities is circulating. Based on crop ratings and their correspondence to previous years, some analysts have argued that the yield could ultimately be anywhere from 2 to 5% above trend. A yield 2% above trend would equal a national yield of 184.6 bushels per acre, while a yield 5% above trend would equal 190.1 bushels per acre. To the contrary, many have argued that such yields will be almost impossible to achieve given large U.S. acreage and the strong possibility that farmers have reduced inputs like fertilizer due to high costs and lack of on farm profitability.
We're wading into very dangerous waters here, Mackenzie. People get very, very upset when you talk about the idea or possibility that the crop may be big, because that means that prices could move lower. And that's very upsetting to our crowd, and understandably so. I don't personally do opinions on the size of the crop. That's not what I do, but I am aware of what's being discussed. And I saw the number 190 or an iteration of it printed in several different places yesterday. So this is something that people are talking about, and it's something that we need to talk about. Let's look at this. When was the last time we were actually above trend? I think it was 2018 was the last time that the national corn yield was above trend, but we had a string of years from 2014 through 2018, where the corn yield was several percentage points above trend. In 2014, we were 4.8% above trend. 2015, we were 2% above trend. 2016, we were 4.6% above trend. 2017, we were 4.6% above trend. 2018, we were 3.3% above trend. So if you wind up like even on the lower end of that spectrum, 2 to 3% above trend, you're talking like a 185 or 186 national corn yield. And this is what's being discussed based on the crop ratings and the crop ratings alone. I think that there is a lot of merit to the counter arguments that you mentioned. Okay, so we planted a ton of corn acres. 95.2, I think, is the highest since 2013. And all of those acres were not planted in Iowa and Illinois. You had a lot of corn acres planted in what we'd call fringe areas, which just don't have the yielding the yield prospects. You're not going to yield as well in those areas. So that's one argument in itself why, no, we're not going to have a record yield, or maybe we're not going to be 2 to 5% above trend. The other argument that you mentioned is the input argument. And I have heard from just about every premium subscriber that we have that, Joe, we've cut back on inputs a little bit. Fertilizer is really expensive. We've cut back, and it's going to hurt yield potential. I don't know how true that is on a national scale, but I definitely understand the argument. So we would love to hear your opinion. If you guys have a strong opinion on what the corn yield may be this year, let us know. I know it's only July 2nd. We've got a lot of weather to get to. Maybe the third counter argument that I did not mention would be weather. June weather was pretty good for a lot of places, and we're going to get to weather here in a second. July weather has some question marks and some holes and some potential problems that we'll get to in our next story. On this same note, I'm just going to run right into our ad this morning. Pete Meyer was on yesterday, and we discussed a lot of this. If you guys don't know Pete was a professional trader in Chicago. He was then an analyst for S&P, where he worked with the people that we call the funds. So he has a lot of insight into how this all works. And Pete explained his thoughts on corn prices, what the funds are thinking, and why they're selling corn at such low levels. Is it because they think the crop is big, or is it for other reasons? Pete explains his thoughts on that. Pete is an absolutely fantastic guest. We're super happy to have him. If you want to see that video, it was like 25 or 30 minutes long. We covered a lot of ground yesterday. Sign up for the premium deal this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. In other notes, in the premium stuff, I believe on Thursday, Chris Barron and Shay Folk are going to come on, and we're going to talk about crop insurance safety nets, and they're actually going to have a tool available where if you're a farmer, you can punch in your own, APH, your yield possibilities, and your insurance coverage, and it'll spit you out like where you stand in terms of that kind of backstop with the market and prices. It's something that unfortunately we need to discuss again this year. Go to standardgrain.com, sign up this morning. It's a $50 per month subscription. Cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. Just a ton of info direct from us every single day, guys. Support independent media. We don't have sponsors. We're not backed by anybody. It's just us and you. So if you're a premium sub, we love you. If you're not, we still love you, and you should give it a shot.
Onto the weather. The U.S. Corn Belt will see only scattered rainfall during the next 5 days, with the heaviest amounts expected in parts of Minnesota and Wisconsin. This morning's Euro and GFS models are somewhat conflicted with regard to rainfall during the 5 to 10 day period. The GFS remains dry for much of the eastern Corn Belt, while the Euro is wetter. Above normal temperatures are slated to persist through most of the next week. The overnight GFS run indicates that heat will persist during the 8 to 14 day period, although ensemble data for the same time frame involves much less heat.
Yeah, so there is some conflict in the forecast, especially during the 5 to 10 day period. You look at the Euro, if you guys are watching on the left, and you've got rain in Illinois and Indiana and Ohio, and there's quite a bit less rain based on that overnight GFS run. So there's some conflict here. There's also some conflict with the heat. We're going to run above normal in terms of temperatures for another 7 days. And then the overnight GFS run says that heat continues and even exaggerates into the 8 to 14 day period, while the other models, I was looking at GFS Ensemble, I was looking at Euro Ensemble, they don't really line up with this. They're talking more average temperatures. So there is some debate out there with regard to heat. Perhaps one reason that the market is not interested in this, week of hot and dry weather around 4th of July, that's typically a pretty bullish thing for the corn market. It's not this year. Maybe it's because rainfall has been adequate or substantial. Just over the last 7 days, U.S. corn areas weighted average have seen double their normal rainfall. And that's not everywhere. You look, there was some pretty damn wide band across central Illinois, parts of Indiana that were drier than normal over the last week. But on the whole, the market is just not concerned about weather, even though there appears to be some like not so ideal stuff in the cards here.
StoneX has raised its projections for Brazil's corn and soybean production. The firm is forecasting this season's total corn production to reach a record 136.1 million metric tons, up from its previous estimate of 134. Its outlook for Brazil's second corn crop was also increased from 106.1 million metric tons up to 108.2. The upward revision was attributed to improved growing conditions and stronger than expected yields. StoneX also boosted its outlook for Brazil's soybean crop to 168.8 million metric tons, up slightly from the previous forecast of 168.3.
Okay, so that soybean estimate is the estimate for the crop that was harvested months ago. The corn estimate is the bigger thing here. So they've got the crop at what, 136.1? Is that what it was?
Yes.
USDA is at 130. So that's a difference. That 6.1 million metric ton difference, that's 240 million bushels. That's pretty substantial. Now, this USDA versus, privates and USDA versus CONAB, this is nothing new, but all indications that I've heard and read and been told is that this Brazil crop is very big and that USDA is too low and they're going to have to come up. And actually, a lot of people think that even this 136 is too low. There are people talking 140, 145. I think I've heard 150 tossed around. So I don't know exactly where it stands, but you're talking hundreds of millions of bushels of extra Brazilian production potentially out there. And the crop was only, 20% harvested as of the last update. I think they're probably up to 30% in real time. But this could provide us with some additional competition on the export market. That being said, U.S. corn, given this sell-off, is fairly priced on the export market and should continue to generate business.
Uncertainty surrounding agricultural trade led to a decline in U.S. farmer sentiment last month. Purdue University's CME Group Ag Economy Barometer Index fell to 146 in June, a 12-point decline from May. The drop was largely driven by a more pessimistic outlook for the future, as the index of future expectations slid 18 points to 146, reflecting growing concern over the outlook for agricultural exports. 46% of respondents expect President Trump's tariff policy to negatively affect their farm income, up from 43% in May, but down from 56% in April. Meanwhile, 27% expect the tariffs to have a positive impact, which is unchanged from May, and an improvement from 22% in April.
I don't know. I don't know. I'll
This
tell
is
you
your
what. I'll
favorite
tell you what.
headline every
Take this
month.
off. Take this off the screen. As far as I'm concerned, I talk to a lot of people. Farmer sentiment right now is about as bad as I've ever seen it in 20 years.
That makes sense.
It's about as bad as I've ever seen it. I think that the uncertainty is about as high as I've ever seen it. It's everything from the fact that prices, corn, soybeans, wheat, whatever, they're all drastically below production cost. Input prices are through the roof.
Yep.
There's so much uncertainty with regard to policy and tariffs. I think it's as bad as it's ever been in my career. Now, you go back before our time, you go back to the 80s. Yeah, it was probably worse back then, I'm sure. And there was probably some times in the 90s pre-ethanol was pretty bad, but it's pretty damn bad. I'll tell you what, I don't agree. I never agree with this sentiment barometer. We talk about it every month. There were a couple interesting slides, however. What impact do you expect the U.S. government's imposition of tariffs on imports living your farm? And people think it'll be negative. Okay. But then you go to the other one. Over the next 5 years, do you think ag exports are more or likely to increase, decrease, or remain about the same? And 41% said increase. So there's still some positive vibes out there. I guess maybe more negative vibes, but I don't know. We talk about this sentiment thing every month, and there's some interesting charts and some stuff in there, but just what I'm seeing, the sentiment is not good. And you guys can tell me if you agree or disagree based on your own personal feelings, of course.
Big oil and U.S. farmers are facing off over biofuel policy. The two sides are in disagreement over the details of the 45Z tax credit set to be included in President Trump's tax legislation. Farm groups are supporting a Senate bill that would limit eligibility for the credit to biofuels produced using feedstocks sourced solely from the US, Mexico, and Canada. The oil industry strongly opposes these limitations, arguing that restricting international feedstocks would drive up production costs and ultimately raise fuel prices for consumers. The dispute marks a sharp departure from the recent alignment between the two sectors, which had found common ground in their shared concern over the growing rise of EVs.
So late yesterday, Senate Republicans approved their version of Trump's multi-trillion-dollar tax and spending package. And this keeps your hopes for 45Z and this exclusion of foreign feedstocks alive. When we talk about the exclusion of foreign feedstocks, what we're talking about is things like used cooking oil from China being used to make biofuels in the United States and receiving the tax credits. It would be very much in line with Trump's, America First type agenda to eliminate foreign feedstocks and only give the credits to U.S. feedstocks. That should be the direction that we're heading. I think there is some optimism about this. Look at soybean oil this morning. It's trading sharply higher. So I think that this is overall maybe a big positive. What did cattle do yesterday?
Cattle futures took a beating. Live cattle were $2 to $3.12 lower. Feeders saw losses ranging from $4.65 down to $5.10. Box beef prices were mostly lower. Choice was up 4 cents at $3.95.60, while Select was down $4.04 at $3.80.06.
Stock market's just a little bit higher this morning. Treasury's off a little bit. U.S. dollar is about flat. Crude oil is up 76 cents in the August WTI at 66.20 last trade. Have a great day, guys. We'll be back on Thursday.